Okay, welcome back. There's 8 minutes to go for the pre-open session at 9 a.m. Anuj is here with a quick setup as he sees it. Anuj, hi, morning.
Morning, Prashant. Obviously, so the market on Friday, what it did was price action was very important because it tested December low and it protected that just by about 20 points and bounced again. So, and if you see the FI data, there's been massive shorting, so there could be some covering. But keep in mind, our market has been underperforming. So it's not just about global cues. And if today's rally fails, it will be a big negative. Of course, globally, there's been a bit of a support in terms of the US bond yields and the dollar index coming off because of what happened in the US in terms of data and the fact that maybe the Fed would relent a bit. That's what the base case was. But equities and commodities are in for a bit of a risk rally. But let's see if the Indian market sees follow through because in terms of levels, 17,774 now establishes as a bit of a near-term support for the market. The first resistance for Nifty would come in at 18,048, which was Friday's high, and also going by the call options base, the first resistance for the Nifty. As I said, the Indian market has shown signs of underperformance. So today's trade will confirm whether the market's texture has turned from buy on dips to sell on rally, and whether the market makes a lower high or not. The last high was 18,250. And I think in that, the key index to track is the Bank Nifty, which has been leading the decline over the last couple of days. The first resistance for Bank Nifty is at that 50-day exponential moving average of 42,428. And major resistance is at 42,850 to 42,900 because that's where both 10 and 20-day exponential moving average are placed for the Bank Nifty. And Friday's low 41,877 is now sacrosanct as far as the Bank Nifty is concerned. And Prashant, I'll just add one more thing. Because FI has been selling so much and DAs are buying, I think the piece you did on Bajaj Finance, I was going through that. I think that exemplifies, what's really happening in the market among stocks where there's large holding from both FIs and DIs. Where one side is selling a lot and the other side can't buy, and this is what's happening in that stock.
Oh, absolutely. And that's something we'll keep an eye out on in terms of technicals as well. It's an important name, for sentiment amongst financials and for the market as well. Anuj, thanks very much for that. Well, Sudarshan Sukhani is with us, and we also have Mitesh Thakkar for some technical trading ideas. Gentlemen, good morning. Start of a new week. How are we set up, Sudarshan? Your sense?
Yeah, good morning, Prashant. Well, the Nifty has been now in a trading range, very well defined, with support at 17,800 and resistance at 18,250. That support held on Friday, as Anuj was also explaining. So what we are now likely to look at is a travel from 17,800 towards 18,250. That gives us 450 points. Some of it will be eaten up by the gap up, but there is still an opportunity for people to buy and see whether we can reach that 250 level. So the trade for today is to look to buy once the gap is, once those 15-20 minutes of the early morning are over, buy on a small dip, buy on a small consolidation. But today is not a day to short sell because we have some overhead room to grow towards 250.
Okay, Mitesh Thakkar is also with us. Mitesh, good morning. The big question is whether this 100 DMA of 17,900 holds or not, right? What's your best guess? And what should the strategy be for today?
Good morning. So I think the important thing was that we got the earlier low, which was made in the third week of December, 17,800. I think on a closing basis, we got a 17,806 as the, and we kind of managed to hold on to that. But the structure is still on the weaker side. But I think, given the fact that we are at a support level, we are slightly on the oversold side. I think there could be a good probably, some kind of a stronger bounce back as the SGX is indicating, and we could see some follow through happening over here. So the levels which I would watch on the upside, I think one to begin with would be around 18,000, 18,020. And if we start crossing that, then even 18,150 or 18,250, which was the recent highs, I think could be visited. So in the short term, I think unless until now we break below 17,800, I think we would not be looking for more of negative ideas, but looking at seeing which stocks are reversing from oversold levels and could give a good bounce back. I think that's the theme for the next couple of days. And only if we start breaking below and closing below 17,800 would we again turn negative on the trading side of the markets.
Okay, let's do one thing. Let's take a quick commercial break. On the other side of the break, we'll have the pre-opening rates. We will also get some stocks. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai, and we're going to tell you how you're placed as we begin trade this morning. It is going to be a solid day of trade, no two ways about that. At least the start will be well in the green, and let's see how we take it from there. Sudarshan Sukhani and Mitesh Thakkar are sitting by to give us some stock ideas. Sudarshan, considering there's going to be this gap up opening, what are the stocks that you'd buy or sell today?
Well, mostly it's buying. I start with Ashok Leyland. Ashok Leyland has been outperforming the market. It's been showing very good relative strength. That's a buy with stop under 147. Bata India is my only intraday short. That stock has been in a bear market. I'm surprised. It was always a favorite for me. But then that changes. Bata India is an intraday short with a stop above 1650. Bosch, B-O-S-C-H, and I'm not pronouncing it correctly, I think. Well, Bosch or Bosch, whatever, is a buy with a stop under 17,000. Again, it's an outperformer, just like Ashok Leyland is. And Reliance, that big boy, is suggesting that it could be a major contributor to the Nifty uptrend if that comes about. Reliance is a buy, and there are a lot of disclosures on Reliance. I've come on your channel, and your channel is owned by Reliance, so whatever.
Okay, all right. Thanks for that, Sudarshan. Well, let's get in Manoj Muralidharan as well, VP Derivatives of Religare Broking, who joins us. Okay, I think we have Mitesh. We'll go through Mitesh's picks first. Mitesh, run us through your picks.
Yeah. So I have more of buy calls today. Tires is a theme, which I've liked, and while there were declines on Friday, I think MRF stood tall. That's a buy with a stop at 92,000 here, and a target of around 96,000 on the upside. HDFC Life is something which I've been recommending for the last few days, and I think even now remains a strong buy. That's recommendation with a stop at 604 for near-term targets of 630. And RAC is also on the buy list. Keep a stop below 120 here. Look for short-term targets of around 130. The solitary sell call which I have is Navin Fluorine. On a bounce back, let's say around 38.85, 38.90, I think that will be an ideal level to short this with a stop at 39.50 for targets of around 37.60.
All right, thanks a lot. Appreciate it. The pre-opening rates are just about kicking in right now, so would be imperative to perhaps check a couple of big rates this morning. There's Titan, Kalyan Jewelers that have had a good run, very good, strong business growth. So Titan is up about 3%. ICICI Bank is up almost about 4% TCS ahead of its numbers is up over 1%. Just waiting by for these rates to adjust, but looks like it's going to be a solid start to trade. Manoj Muralidharan, the Vice President Derivatives at Religare Broking, is joining us now. Manoj, hi, good morning. How are you positioned today? Considering this is going to be a gap up, would you buy into it? Would you choose to sell post the gap up opening? And what's the recommendation in terms of stocks?
Good morning, Sonia. Sonia, I guess there is short position which has been carried on Friday. So I guess after this gap up, there is a possibility the Nifty might dip again. So the weighted average price of 17,950, this is precisely intraday levels that we are talking about. So I believe that might become a level where the Nifty might find a support. So after the gap up opening, levels of 17,950 on the futures would be a better buy if I might do that. And for 1,800 odd points. So I believe it might be a range bound session with 18,100 and 17,800 the previous low. So I'm not really expecting big moves, at least on the index, both that goes for the Bank Nifty and Nifty as well. Stock specific, Sonia, I guess ONGC is one stock that is consistent buying, I guess last month, even from October onwards, if you remember, 134 onwards. Now the stock is almost at 145. Even Friday there was good buying, and we believe that the stock has a potential to go all the way to 156 to 158. So that becomes a buy to buy closer to 146 to 48 where the market opens. A stop loss should be 142 with a target of 158. From the banking stocks, we believe that Kotak Bank has still some weakness, and we might see some pressure on the upside. So getting through a put option would be a better strategy. So use a strike of 1,800 strike for this Jan series. The put option closing is, I guess, around 37, 38, but wait for levels of 28 to 30. That becomes a good buy. The stop loss should be around 20 rupees, and we expect target close to 42 on that.
Okay, all right, Manoj, thanks a lot for that. Well, let's get you our special Momentumizer segment. Well, Anant Raj, that's the stock on our radar, real estate play. In Friday's trading session, the market was a little bit brittle, but this one ended higher in trade. So it outperformed both the mid-cap as well as the small-cap indices. And that's why it caught my attention. Now, I was looking at a couple of other data points. On a closing basis, it closed at its highest level since 15th of November 2022. Remember, that time it was moving with good momentum. And from there, it did see a bit of a correction. The stock is up closer on 30% from the panic lows that we saw in December. They're just a couple of weeks or so ago. And on the traded volumes as well as delivery volume side, but it's pretty much in line with what we have seen in the past 1 month or so. In that panic low, though, what was encouraging was the promoter entity, they came in there and they picked up closer around 6 lakh shares also, giving some sort of support. Now, what are we looking at? Well, on a support basis, the 20 and the 50 DMA on the downside, that will be crucial. Well, let's see whether or not it can go and make a fresh 52-week high and sustain over those levels. Because in November, it went to a 52-week high, but from there we saw quite a sharp correction. So that one makes it to our momentumizer segment.
Okay, so we'll watch out for that, Anant Raj. But let's put focus on the financial space. A whole host of banks, NBFCs posted their Q3 business updates. Krishnan ASV, the lead analyst, BFSI at HDFC Securities, joins us now to discuss more on that. Krishnan, good morning and Happy New Year to you. I think Bajaj Finance is on everyone's mind because, you know, post the business updates that came through, there was a big sell-off in the stock. It wasn't a bad picture posted by Bajaj Finance, but I guess it's slower growth compared to what we've seen earlier. What do you do now?
Yeah, hi Sonia. Wish you a very happy new year too. Not much has changed from last Monday to now. I mean, when we were featured. So I think Bajaj Finance, among a few financial service names, is definitely pricing in a fairly high, steep growth. So to that extent, it was not a disappointment on our numbers, but then we were consistently below consensus as far as growth forecasts are concerned for the foreseeable future. So to that extent, 27% did not seem an outlandishly bad number. However, as I said, the market, I mean, the street was probably pricing in fairly steep estimates there. Having said that, it remains a very strong franchise. Just that a lot of these financial service names, when they are pricing in high growth, any disappointment there becomes fairly meaningful for the stock price.
Krishnan, hi, morning. No, so what should one do with that stock now? It's down some 25-26% from its highs. You know, there is also this thing that eventually, will it become a bank? I mean, the RBI wants it, I guess, wants it too. You know, some believe that could lead to some more derating, but that's, I mean, of course, what if? At this point, is there enough comfort in terms of valuations or not really? Your sense?
So we had officially a reduced recommendation on Bajaj Finance. However, having said that, the correction in the stock price has been fairly steep, so it does begin to look attractive with every correction thereafter. All the structural reasons about it having reached a certain critical size and now having to become a bank, I think all of those will continue to weigh down. I mean, even if well-managed franchise, I think there are these regulatory costs and statutory obligations which will start building up. Plus, also remember there is a Bajaj Housing Finance that may have to get listed within the next 3 years, according to the list that the RBI has given. So there are some of these factors which will probably weigh down on Bajaj Finance. Having said that, I mean, as I mentioned, with every passing correction, I think the stock does seem a little more attractive. Yeah.
Okay, all right. Hi, Krishnan. What about IDBI Bank? You know, there's been some progress with regard to the privatization. What's your quick comment on that? Well, the stock was higher in the last couple of sessions on hopes that there could be enough demand. What's your sense?
We don't have IDBI Bank under coverage. Generally, we think the investable universe in PSU banks is fairly limited just because ownership has moved from PSU to a private sector LIC in this case. Does not materially change the nature of the beast. But yeah, we don't have specific coverage on IDBI Bank. What we would look forward to is what happens to ratings, right? Typically, if ownership moves, there are lots of these PSU banks which actually weather the storm based on the fact that they are sovereign entities, right? So the ratings are based on such factors which are essentially crucial for their rating. So I'm sure there are, I mean, incoming investors also probably have certain responsibilities and certain assurances coming from the government as to how long that rating might continue, etc. So I think it's very conditional, to be very honest.
Okay. Federal Bank has been a stock that you've liked for a long time, but that stock has gone from 80 to 140 in the last 6 months. You see more upsides there?
Yeah, we have a buy there, long time coming. So yeah, we still remain very constructive on the name. I think this is one of the mid-sized banks which can actually break out towards becoming a sustainable franchise. I think they're already doing all the right things there. Yeah.
All right. And before we let you go, there are big earnings coming through this week as well. You have HDFC Bank on 14. There's ICICI Bank on 21st. If you had to buy, from a long-term standpoint, a couple of stocks ahead of their earnings, which ones would they be? Where are you expecting a strong set this time?
So, I mean, very obviously, we can't recommend HDFC Bank. That remains a parent entity.
Of course.
ICICI Bank remains our top pick. I think increasingly you will see banks, at least the private sector banks, because loan growth is so much higher than deposit growth, they will be far more selective in moving towards high ROE businesses, higher yielding asset classes. I think that selective allocation of capital is what will play out over the next year, is what I say. Yeah.
Okay, all right. Thanks a lot, Krishnan, for stopping by and giving us your view on the banking space. Well, it's 9:10, so let's get Sudarshan back to give us his 9:10 call. Sudarshan?
Well, buy the Nifty on a minor dip or consolidation, buy Ashok Leyland with a stop under 147.
Okay, all right. Got that. Mitesh, what about you? What's your 9:10 call?
Yeah. I'll go with a long call on REC with a stop at 120, targets of 130.
Okay, thanks a lot for that. Well, Ashoka Buildcon, by the way, is up about 4%. It's the lowest bidder for an NHAI project. So it's picking up quite a bit of pace, Ashoka Buildcon. So just keep that on your radar as well. Nimesh is here with us to tell us what's the standout brokerage report of the day. Nimesh, what do you have?
Hi, Sonia. Today's standard is on Alchem Labs. Nomura has upgraded the stock to buy. They have a target price of 3,600. They believe the risk reward is favorable at current levels. In fact, they expect steady domestic growth and improvement in the EBITDA margins could be the near-term trigger for the stock, that is Alchem Labs. In fact, they expect the EBITDA margin recovery from the multi-year lows, which will be driven by three key reasons. One, price increase in the India formulation business. Two, easing of cost pressure. And three, cost control initiatives. In fact, they expect the Enzil deal and US INR movement will lead to earnings getting upgraded by at least 2% for FY23 and FY24. So on back of that, they've upgraded Alchem Labs to a buy today, and they have a target price of 3,600 in the stock, and they believe the risk reward is favorable at current price.
Nimesh, thanks very much. Alchem in focus. Let's revisit Titan, which of course came out with their quarterly update. Mangalam, over to you.
Well, strong resilience is what Titan portrayed in their third quarter update, because the overall revenue growth for the company came in at 12%. Jewelry business grew at around 11%. One would say that, optically it looks lower, but it comes on a high base of 37% as well. And quarter on quarter, it's a jump of 24%. Importantly, the internals of the company's performance look even stronger. Not only has jewelry grown at around 11%, they've also added 22 new stores, and at the same time, the studded share has improved, so that bodes well for their margins. And then the other businesses, which actually stand out much more, a 14% jump in watches led by wearables is a positive. And then the new businesses that the company has seeded, fragrance, fashion accessories, as well as Tanera ethnic wear, all of them have grown anywhere between 40 to 100%. And the eyewear business, double-digit growth continues. So on a high base, double-digit growth across all parameters is a positive.
Okay, all right. Mangalam, thanks for that. Stock is opening up more or less flattish. Rima joins us to tell us about the telecom stocks. Rima.
Thanks so much for that. So there is an interesting note from CLSA where they're talking about the three trends to watch in 2023. One, their expectation is that the telecom industry's revenues will grow in 2023, similar to what we had in the prior quarter, led by rising data adoption and tariff increase. Secondly, they're saying that this year will see 5G rollout and monetization of the high-end 5G customers. And third, they're saying this will be a decisive year for Vodafone Idea, whether it emerges as a viable third player. They're also saying some events to track this year. One, 5G rollouts. Two, tariff increases. The government rules on direct 5G spectrum allocation to enterprises. Finalization of the new telecom regulatory bill. If it comes through, it will be positive for Vodafone Idea. And finally, a likely Reliance Jio IPO. Their top pick in the telecom sector is Bharti Airtel, target price 1,040. The stock trades at a 10% discount to the 5-year average, and they expect Bharti Airtel to lead in terms of tariff increases, and their expectation is ARPU will rise to 236 by FY25. On Vodafone Idea, they have a sell call because of falling market share and lack of fundraising as of now. On Tata Communication, they have downgraded the stock to an outperform versus a buy. The target price has been lower to 215. Indus Stars, they're saying, offers deep value in terms of valuations. It's cheap. But because of the Vodafone Idea uncertainty, they are negative on Indus Stars. And finally, Sterlite Tech, they've downgraded it from a buy to an outperform because of rising debt concerns. Back to you.
All right, thanks a lot for that. Well, we have a minute to go before the market opens for the day. It's going to be a good opening, no two ways about that. But Titan, interestingly, is in the red. So just keep an eye out on that. Titan is down about 0.3%. While on the flip side, Kalyan Jewellers actually up almost about 3% So that one's looking pretty good. TCS, of course, ahead of its numbers will be in focus. HCL Tech, after winning that ODP Corp order, is in the green as well. So Mitesh, just very quickly, 30 seconds left. TCS, HCL Tech, your thoughts?
I think they've been, basically HCL Tech particularly has been sideways. If you look at the chart for the last 2.5-3 weeks, 1,050, 1,055 is the upper end of the range, 1,020, 1,015 is lower. I'm still waiting for a decisive signal over there to take a direction call. And TCS has slightly turned negative. But sure. I think, if it starts breaking below 3,200, I'll even go short there.
All right, that's bang on time. Thanks a lot for that, Mitesh. Have a good day. For now, the start is well in the green, almost 100 points higher now on the Nifty. The Sensex is up about 260 points. The Bank Nifty is also holding up, actually, but the mid-caps having a better showing this morning, up about 0.7%. From the frontliners, it is largely these commodity stocks, steel stocks that are doing well. There's Tata Steel, JSW Steel, even Hindalco is up about 2%. So that whole piece is doing well. Then you have TCS ahead of its numbers, that's in the green. Wipro, Tech Mahindra in the green as well, up 1.5% there. Adani Group stocks are doing well. Adani Entertainment, Adani Enterprises, Adani Ports are up in the green right now, up about 1%. And then you have something like an M&M that's holding up with a gain of about 1%. On the downside, as I said, Titan is sulking post that update. So Titan is now down almost 1.5%. Asian Paints as well is in the red, so down about 0.3%, while ICICI Bank ahead of its numbers later this month is down about 0.2%. But very peculiar to see Titan. Perhaps just some, profit taking is what you're seeing in that name, despite a decent set of numbers coming through. While its peer Kalyan Jewellers is actually doing well, up almost about 3.5%. But good opening for the market. The advance decline ratio is well in favor of advances, and the Nifty is now comfortably above the 100-day moving average of 17,900. Whether it holds or not, only time will tell. Whether it builds on to its gains. But for now, a lot of heavyweights are supporting the market on the upside. Some of these life insurance companies continue to charge ahead. So SBI Life is up almost about 1%. But the mid-cap's looking better.
Well, that's right, Sonia. A quick word on the Nifty, though. It was good to see that we didn't gap up 140, 150 points odd. So with a more subdued gap up, well, it gave you a bit of an entry opportunity, and immediately we saw a 20-point downtick. So around 17,940, that's the low of the day. The 100 DMA should be a bit of a stop loss. Let's focus on a couple of names then. The mid-cap index, as Sonia mentioned, well, it's showing some good traction. Advanced decline ratio of 10:1. Few stocks that are doing well. Well, metal stocks, Nalco, JSPL, Hindustan Copper and SAIL. Well, they are the top F&O gainers. In fact, they've done pretty well this morning. Kalyan Jewellers is up 3.5% as we speak, so that's done pretty well. Phoenix Mills, they came up with an update, and the consumption uptrend continues. The Q3, well, it was at around 130% of 2019 level. So good news out there. Ashoka Buildcon, the lowest bidder for the NHAI project, worth around 2,160 crores on. So that's higher. IDBI Bank, well, it continues its good run. Multiple EOIs for the strategic divestment of government and LIC stake. So that's done another 4.5% today, building on the gains that we saw earlier. Tata Steel, you have the metal tailwind, as well as, you have that operational update that came about. So that's up close to around 1.5%. On the flip side, Bandhan Bank, that's down 2.5%. The CASA falls over 8% on a sequential basis. The gross loans, though, are up by close to around 14%. So that's taking a bit of a knock. Vodafone Idea, let's see what that stock's doing. Sources indicate that the SBI-led lenders, they are not in favor of granting additional loans. So that's unchanged for now. And New India Assurance, well, we had the December premium that was down 2%, and it appears they've lost some market share as well. But for the time being, the stock is holding more or less flattish. So good start to trade.
Look at Higachi, which is up, 4.5%. It was limit up, by the way, on Friday. I think was up some 20%. It's starting about 4% higher. Paytm and IDBI we mentioned, Kalyan Jewelers we mentioned. What else? There is Hindustan Copper, Nalco, these kind of names are doing well. National Fertilizers is coming up with about a 4% kind of gain. Indoco Remedies is up 2 3/4. We still have to wait for volumes to pick up because if you go down the list, there's more, but then not backed by volumes at this stage. Titan, of course, we mentioned down 2%. The problem for Titan perhaps is, of course, in light of the numbers which are okay, valuations which are still some 60 times FY24 consensus expectations, which I think may be putting a little bit of pressure. Bandhan Bank is down about 2.5%, 237. We mentioned that. Chola Finance is down about 1.25%. So this is a start which is fairly decent. 8:1 in terms of advances to decline ratio. But we'll see. 3-digit gains on the Nifty to begin the day. 17,963 is what we have. This is a big improvement, of course, on Friday's session when it was a washout kind of a session. But is there more left here as we go through the rest of the session? We'll see. But it's a good start. No doubt about it. Sonia.
Absolutely. It's very interesting what's happening with Paytm, right?
Yeah.
The company has also been promising a return to path to profitability. And this in Q3, the numbers are looking good. I mean, on a quarter-on-quarter basis, the loans disbursed are up over 35%. The number of loans disbursed are up about 11%. And now the Paytm Bank has also received the RBI approval to appoint Surinder Chawla as its managing director and CEO. So the number of transacting users have gone up. So it'll be interesting to see if Paytm builds on to these gains because the stock, of course, has been really very volatile. But the company has been promising a path to profitability, and these numbers are looking good. Loans disbursed up about 36%. Anything else that you've spotted?
Well, no, a couple of other names, Sonia, that are standing out, particularly from the F&O basket itself. A couple of stocks actually that are a little bit under the weather today. You have ICICI Pru that's down, Chola Investments as well, they're down closer to 1.5%, and Godrej Consumer, well, that is little in the red, but let's see what Godrej Industries is doing. In Friday's trading session, well, that was one of the big outperformers. Persistent System from the IT pack, well, that's holding with a gain of around 2.5% or so. Just keep an eye out on that one. And ACC, that's the other one that's bounced back a little bit. Some of the cement stocks have had a bit of a volatile time. The hope is that margins will recover from here on. ACC is now up close to around 1.5% or thereabouts.
All right. Gati is another one which was up some 14-15%. No news flow on Friday, but now it's pulling back a little bit, 4% or so on Gati. So keep an eye. These are some of the sort of follow through or lack of follow through moves, at least from Friday's session that we had. 112 on the Nifty. Decent start. Manishi Chaudhary is with us, Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. Thank you very much. I think the market probably has given up believing too much in, one-off kind of data which points out to disinflation out of the US, right? That macro theme is still the biggest one this year, 2023. So we got some data points which pointed to that. How durable is this rally that we've seen in the US? This sharp, steep fall in US yields going to be, or you think we'll see a reversal soon enough? Your sense?
I think this sharp increase in the equity markets and the fall in yields that we've seen, that's been engendered by number one, the decline in economic growth and the PMIs, possibly the PMIs, which are a lead indicator. That's possibly been a bigger driver of this expectation of slower growth and consequently the expectation of the Fed becoming less hawkish going forward. That said, there are other data points which point to a different direction, and that's the jobs report. We still have a reasonably low unemployment rate. We still have reasonably high non-farm payroll data points that are coming out of the US. And if one combines that with the recent commentary from the Fed, from the December meetings, the minutes, it would appear that the Fed is not done yet. Our base case expectation is about another 75 basis points of rate increase over the first quarter of 2023. And one must also put that together with QT, quantitative tightening, that the Fed is engaging in. Since September, they accelerated the pace of QT. And we think that for the foreseeable time horizon over the next couple of quarters, that's likely to continue. So in a nutshell, we believe that this recent rise will possibly have to give up some of the gains that we have seen across global equity markets. We think that the first quarter, at least, if not the first half, is going to be a period of continued turmoil. We might even see another round of US dollar appreciation compared to the emerging market currencies. So, and I think in the near term, over the next one quarter or so, we have to tighten our belts and brace for some more volatility in the markets.
All right. By the way, just wanted to mention that the Nifty is now up over 100 points, so looking pretty good. Kalyan Jewellers is really topping the charts this morning, up 5.5%. Manisha, good morning. The space to be in over the last many days has been metals, and even this morning, almost all metal stocks are up in the green. JSW Steel has reported a 20% growth in their volumes, and now with China reopening, there is perhaps a sentiment boost there as well. Is this a space that is good enough for long-term investors to generate alpha returns this year?
I would think it's perhaps better for short-term investors. We think that the metal space, which has been, the China reopening has been possibly the biggest sentiment booster as far as the industrial metals are concerned, rightfully so. But at the same time, if you're facing a situation of global recession, and we are subscribers to that point of view, particularly in the developed markets, then it's difficult to see how this metal space can perform over a longer term. I think it's kind of fits the bill exactly in a different or opposite direction. It's perhaps a better bet for short-term investors over the next couple of quarters or so. But over the longer term, we would rather remain selective and a bit cautious on the metal space.
Okay, all right. Hi, Manishi. Good morning. I think the last time we chatted, you suggested that India you'll have downgraded to neutral, while China you'll be a little bit more bullish on that. Still hold on to that, right? That's a tactical play?
Absolutely. So, on 10th of December, we published our Outlook 2023 report, and the biggest call possibly there was downgrading India to neutral and upgrading China to an overweight. There were two possible reasons behind that. Number one, we clearly believed that the reopening of China, even though that would be a sort of a tortuous path, because we have seen the daily infection numbers going up there, but at the same time, it is not only a big sentiment booster as far as Chinese consumption goes, it will actually lead to possibly even the consumption in the consumer discretionary space, the numbers turning better, and also earnings estimates reviving in e-commerce, internet, and consumer discretionaries. And that's a really big chunk as far as Chinese equity market is concerned. So that was one of the strongest reasons. And at the same time, we also thought that this sell China, buy India trade, which the foreign investors had engaged in over much of 2022, had actually led India to become relatively expensive. In fact, if one looks at relative valuations, India was at a huge premium, almost 2 standard deviations higher than the rest of Asia. So those are the two reasons why we made that switch at that point of time. The valuation argument has possibly been diluted a bit, because over the last 1 month, India has underperformed slightly. So the valuation premium that it enjoyed has declined slightly. But we don't think that that it's at the end of the road at this point of time. We personally think that this valuation correction has a little more room to go.
How are you feeling about the IT stocks now? We kickstart earnings, and this time, I guess, post HCL Tech's mid-quarter, outlook downgrade. The expectations are also low for the sector. But at any point, would you look to buy?
As far as the tech universe is concerned, IT services in India, we actually reduced our position quite significantly in that December churning that we did. The IT services space, after a downturn in the first half of 2022, did reasonably well in the second half. And we think there was a reason behind it. The investor base was actually equating the North Asian semiconductors and chips with the Indian IT service companies. But the Indian IT service companies were actually winners. They were winning large orders from the developed market customers or clients. But we think that after the stocks went up about 20 to 30%, the valuation didn't quite justify, the kind of a downturn or a slowdown in order flow that we could see in a recessionary year. So that was the reason why we downgraded the IT service sector in India, taking out some of the frontline stocks. We still have a presence there, but we think that investors should be a bit cautious on that space, at least in the first half of this year.
Right, Manishi, what about the auto stocks? We've just got the December numbers, and there was some skittishness in the numbers. CV cycle appears still to be on a strong footing, but otherwise there were pockets of worry. How do you approach the space? Y'all were pretty bullish, I think, on the four-wheeler space, right?
That's right. So, in the autos sector, as you correctly mentioned, we are quite positive on the four-wheeler space. What we are seeing here is the classic case of what we call affluent consumption. In fact, that's one of our big themes in India. We are seeing a relatively stronger sales momentum in the four-wheelers, and that too in the upper end of four-wheeler category compared to the two-wheelers. Within the four-wheelers, we would obviously be siding with the market leaders, the players who have a very strong market presence and a distribution reach, and therefore the kind of companies who have very strong pricing power going forward. In fact, in our entire stock selection theme, this element of pricing power, this element of above normal return generation, where return on capital is significantly higher than cost of capital, this is a theme that keeps coming back repeatedly. And even within the auto space, we would stick to that theme for now.
In consumption, what are your thoughts? Because, we have a chat lined up with Godrej consumers in a while from now, and that the entire sector has seen a slowdown in growth because of rural consumption being quite weak, a slowdown post the festive season. If you have positions here, if you have investments here, do you churn out or do you sort of buy into the dip?
We already did that. When you use that phrase, churning out, we actually did that in our early December rebalancing of the Asian model portfolio. We moved out entirely of the Indian consumer staple space. And the reasons were similar to what you talked about just now. Continued weakness in rural consumption, some degree of input cost increase, even though the raw material prices, the soft commodity prices have declined a bit. The depreciation of currencies, Indian and other emerging market currencies in the second half of 2022 could lead to another round of input cost increases to the consumer staples companies, which we think many of them would find difficult to pass on to the consumers. So yes, coming back to your original question, we don't have any presence in the consumer staple space in India in our Asian model portfolio.
Let me just quickly highlight, Manish, stay with us, a few names which have come back into the mix. By the way, the markets are at the day's high, 152 points, 150 points, 18,010 is where we are at. Look at Adani Wilmar, right? It's up, it's the top gaining name with the most volumes at this point in the day. Nowhere when we started Adani Wilmar, but that's moved up very nicely. Sigachi is up 7%, is a number 2 space in terms of volume-led gains. Kalyan Jewellers was up, but it's up a little bit more, 4.5%. GIC RE is coming up with a 3% gain. HG Infra, it's got volumes. I mean, it's 7% higher, and it's within the top 5 sort of volume-led gainers today, at least right now. So lots of new names coming into the mix. Subex Limited is up about 3.5%. Craftsman Auto has done extremely well. So that's another 4% higher. Stocks at about 36.50 right now. Surya Roshni is coming up with about 3.5% gain. Market breadth still very, very steady, by the way. I mean, no real shakeout. 6:1 is advances to declines ratio at this point in time. Titan is still a little subdued. It's down about 2% or so. There are stocks lower, but nothing. It's not a big list backed by volumes or anything for now. Manishi, any kind of sort of non-consensus calls at BNP that you're putting out for 23?
Well, I mean, as far as our Asian exposures are concerned, I mean, there are 2 or 3 main themes that we're playing. The first of these is the Asian reopening theme, and even though the biggest participant here is China, there are ramifications of that into Southeast Asia and other parts of North Asia as well. The second important theme, and this is allied to the first theme, is of course, therefore, a consumption revival. And this is also more so in North Asia. As far as India is concerned, we are focused on the private sector banks in autos, particularly four-wheelers, as we talked about. Selective oil and gas plays, in fact, even not just the pure plays, but also the large conglomerate. And finally, healthcare. I think healthcare has been a relatively new entrant in our model portfolio, where we like both the frontline pharmaceutical and the hospitals space. I think as a consequence of the relatively better performance of the healthcare sector in the second half of this year, we have seen some investor pushback on that sector, but we're still sticking to that outlook. But I don't see too much of a disagreement in any of our sector picks, which would possibly make me characterize them as very deeply non-consensus.
Thanks so much, Manishi, for stopping by and filling us in with your thoughts. Looking forward to chatting up with you, in the next couple of weeks, and wishing you a good 2023. By the way, just keep an eye on the markets. We've seen a good recovery. We're at the high point of the day, as we pointed out earlier today. We got that gap up of around 130, 140 points. It will make things tricky. Luckily, we started off with a gain of around 80, 90 points out, and then we saw a bit of a downtick, and that downtick has got bought into. As we speak, the Nifty is 95 points higher than the lows of the day. So that's pretty good news. And keep in mind, the Nifty Bank is underperforming yet again. It's up only around 0.5%. That could be the one that will swing things around. For the time being, the other pillar is doing well. That's the IT index is doing very, very strong. And talking about IT, well, TCS, they'll be reporting their numbers later today. Rima joins us to tell us what do we expect from this set of numbers. Rima?
Thanks so much for that. So TCS will set the tone, the commentary for the rest of the IT heavyweights as well. So it's going to be very important post-market as. The question is, does the slowdown get worse from here on? And has the slowdown already been priced in? Just take a look at TCS's valuation. Currently at about 25.5 times. The peak valuations were 31 to 32 times. So there's already been a fair amount of derating. But TCS is still trading at a premium to historical levels of 19 to 20 times. So the valuations are somewhere in the middle. Not at the peak levels, significantly off the peak, but it's not even at the average levels that we've seen over the past. So a quick word on the numbers. Dollar revenue growth is seen up 1.6, 1.7%. Constant currency revenue growth at 1.5%. But this 1.5% revenue growth will be significantly lower than the average of 3.5 to 4% that we've seen over the last 8 quarters. So this time, growth is going to be slowing down because 1, Q3 seasonally weak, but 2, there is a higher impact of furloughs. Margins are likely to expand for the second consecutive quarter. This will be aided by the INR depreciation, reducing supply side challenges, and the operational efficiency. So according to our poll, EBIT margins seen up to 24.7, 24.8%, and profits up 6 to 7%. What will you track? Now, the company had said by Q4 FY23, EBIT margins will be at 25%. Does the company hold on to that? But more importantly, it will be the outlook on deal wins. 2 quarters back, the company said deal wins should be in a run rate of $7 to $9 billion. Is there a step down from this because of the macro concerns? Thirdly, the focus on furloughs is going to be very high. Remember, HCL Tech already flagged off higher furloughs in Q3. 4, for TCS, Europe and UK exposure is higher than peers at roughly 30%. And also watch for budget commentary. Now, budgets are typically set, fixed in January to February, so the companies may not come out and give you exact quantitative numbers, but you could get a qualitative idea of what the budgets and the tech spend is looking like, the reprioritization of spend we're looking at. Finally, watch for attrition, because the management said attrition has bottomed out, and also watch for employee additions, because in the last quarter, in Q2, the employee adds were at the lowest that we've seen in the last 9 quarters, and employee additions are also seen as a proxy to future demand. So it's not just a reflection of attrition. So lower the employee adds is also because attrition has come down, but also it's a signal for what the future demand may look like. So that's going to be an important number to track as well. Back to you.
All right, thanks a lot for that. Well, the market now is holding above the 18,000 mark, so it's looking pretty good actually for the index. Tech Mahindra and TCS are topping the charts, followed by Tata Motors. So perhaps the morning belongs to the Tata Group. But Paytm is not too far behind. Surbi is here to tell us why that one is surging. Surbi.
Hi, thanks for that. So Paytm is surging on back of their Q3 business update. Their value of loans disbursed is up 36% sequentially at 9,958 crores. The number of loans disbursed is up 11% sequentially. The GMV, that is the gross merchandise value, is up 9% sequentially at 3.46 lakh crores. The monthly transacting users is also up 6% at 8.5 crores. And the total devices deployed were up 21% sequentially. So all the metrics show positive improvement, and that's why Paytm is buzzing in trade today.
Okay, thanks a lot. We'll take a quick break on that note. On the other side, Sameer Shah, the CFO at Godrej Consumer Products, will be with us to discuss their Q3 business updates. Next, we will